Good morning, social media. This is Bliss Green, the mortgage gal, NMLS 116122, lendingbliss.com. Thank you for being with me today. Wanted to talk with you a little bit about understanding mortgage rates. You know, that's a very, very important bottom line topic when you're talking about financing a mortgage loan. What's my interest rate is what everyone wants to know. And I wanted to just discuss with you, interest rates are important because it is about what it's going to cost you, which is actually representative of an APR. And we're going to talk about that in just a second. But what does the interest rate mean to you? It means that you're going to be stuck with a particular payment for a period of time. And you get to choose how you pay. In mortgage lending, the name of the game is that you get to pay now or you get to pay later, but you will pay. So that's what you need to understand as a bottom line when it comes to selecting an interest rate. And you do have a part in selecting what your rate will be based on what you qualify for, but you can manipulate what the rates are. And then, of course, you can manipulate scenarios with different lenders to find out if you can get a better rate in comparison, but you need to learn how to compare apples to apples. So a couple of things. Rates come fixed, they come variable. A fixed rate's never going to change over the term of the loan. The term is how long you keep the loan, whether it's a 10, 15, 20, or 30-year loan. A variable rate is attached to an index that's on the market. It can be the COFI, it can be the LIBOR, it can be some different market rate, and it's going to change over time. Starts out fixed and then it changes as the market changes. It can go up, it can go down. So there's no wrong thing in mortgage lending. People make bad decisions without considering the consequences of the actual choice that they made. That's how we got in trouble in our industry a while back. And that's how some people potentially will get in trouble with investment strategies and or mortgage lending in the future if they do not understand the choices that they're making and or make good choices and decisions based on their behavior patterns, which is very important to do. So I just wanted to talk to you a little bit about understanding rates. So you know they're fixed, you know the rates are variable. Another thing is you need to understand that rates are impacted by adjustments in our business. We consider it a way to price risk. So there's some factors that we look at when we're looking at the pricing or what type of rate we're going to give to you. And we call these pricing adjustments. And they're based on the loan to value. That's how much money are you borrowing versus the value of the property that you're borrowing against. They're based on your debt to income ratio, even the property type. Are you buying a condo? Are you buying a townhome where the walls are attached? Or are you buying a single family residence? They're based on your credit score. Most definitely is probably the first thing to think of when you're thinking of an interest rate. And then we take those pricing adjustments and we look at them all together and put them on a scale. And that's how you can start to get variations on rates of why one borrower will qualify for one rate and you're getting the same type of property but you qualify for another, or vice versa. So there are pricing adjustments. Any published rate that a bank will give you as their best rate is going to be without pricing adjustments, which means it's probably going to be a single family residence with a loan amount over $200,000, a loan to value under 80%, probably under 75%, and credit scores over 780. If that's not your exact scenario, you're not going to get that published rate. So that's something that you need to understand when you're dealing with interest rates. I'd love to have a conversation with you one-on-one, even if you're in the middle of a loan process right now. We lend in 50 states. I'm happy to make sure you understand what you're doing. That's the number one thing that's important to me with my mortgage clients that are doing business with me is that they understand. Whether you use me or you don't use me, you need to understand why you're making the decision, and you need to understand what the numbers mean to you. If you do another interest rate or put less money down or more money down, what is that really going to mean to you versus the cost out of your pocket today and the cost long term? And if you understood differently, would you still make that choice and decision? So if you need some help figuring out the answers to those questions or understanding loan comparisons, please give me a call. I'd love to be that second opinion or voice for you. My number is 704-890-4866, 704-890-4866. My name again is Bliss Green, the mortgage gal, lendingbliss.com, and I'm looking forward to helping you. Thank you so much.